Hey there, my name's Savannah, and today I'm going to be walking through what an example of one of our quarterly communications for one of our real estate syndication offerings at Willow Investment Group. So this is an actual communication that was just sent out to our investors for Q2 2024, and this is our latest acquisition. This is Forest Park Apartments. It is a 28-unit apartment complex up on the Oregon coast, and we just closed on this property in December of 2023. So we've had it around 6-7 months now. And my goal with this presentation is just to show you the key components that we make sure to communicate to our investors on a quarterly basis. So before we dive in, just a brief introduction. Again, my name is Savannah Arroyo. I'm a co-founder and CEO here at Willow Investment Group. I am also a registered nurse, and I have been working as a nurse for over 10 years now. I have worked in a bunch of different settings within the healthcare system. Most of my career was in leadership and administration, and it was while working in leadership and administration that I started to have a lot of open, honest conversations with healthcare professionals around their money and finances, and it was just truly heartbreaking to see over again healthcare professionals who could literally save lives yet are living paycheck to paycheck because they've never been taught anything about investing. And at this point, I had started investing in real estate in 2020. It had started to create a lot of income and additional income streams for my husband and I. And so I became very passionate about sharing these investment opportunities with other healthcare professionals. So we have made it a goal to partner with other healthcare professionals in these deals. And so now we're going out and buying apartment complexes in partnership with other healthcare professionals like yourself. So to date, we've helped hundreds of healthcare professionals financially through different online platforms, courses, coaching, and these investment opportunities. So a quick overview of what we cover in these quarterly communications. In this one, we're going to be specifically diving into turnover updates because that's we got 8 of them going on in this property so far in the first 6 months. We're going to take a look at the rent roll and what these turnovers are doing to help us achieve those market rents. When we bought this building, rents were 40% below market value. So huge value add opportunity here. Then we're going to dive into our business plan, touch base on what our goals are with this property, a quick financial update, and another company update. So first, we always share tons of pictures with our investors, updates with the turnovers that are going on. Like I mentioned, 8 turnovers in the first 6 months. So we've been very busy at this property. Here's a look at one of the units. This was a light turnover. It was just flooring and paint. As you can see, we kept all the same doors, windows, and cabinets in the kitchen. This is unit E1. This one is currently under construction right now. This one will be a light turn as well, just paint and flooring. Here's more of E1. Here's E2. This was a full renovation, all new appliances, new cabinets in the kitchen as well. More pictures of E2. As you can see in the bathroom, a new vanity, new shower, new toilet. Here's unit E3. This one is still under construction as well. And then F1, this one was a full renovation as well. It will be a full kitchen, bathroom update with all new appliances. So again, this is where the value add opportunities are in multifamily and especially in real estate, is the previous owner didn't have the operating reserves to take care of these renovations. Rents were 40% below market. He didn't have the ability to raise rents because he wasn't completing any of the outstanding repairs or maintenance. And this is where we saw the value. So us coming in, purchasing the property, making sure that we have a hefty operating reserve and renovation budget so that we can start turning over these units and increasing rents up to market value. So this is an example of our rent roll. When we purchase these investment properties and we make projections, we're looking at a lot of different numbers. So much risk can be mitigated in real estate through proper underwriting, through market analysis and looking at employment trends and population trends. We also look at the building's what is called a T12, the trailing 12 months, so profit and loss statements, P&Ls, and we're diving into these financials, reviewing every line item to see exactly where money has been going in this building every month and where money is coming in. And we look at that with investor eyes on, and we're seeing where the opportunities are to add value. So this is an example of what one of our rent roll looks like. These were our goals to achieve rents year over year. On this building, we do have our exit plan is we plan to do a refinance at year 3, because by the time we hit year 3, we will have forced appreciation and value into the property by increasing these rents. And so the property will be appraising at a much higher value in 3 years from now. And so our goal is to refinance, take out all that money, return a good chunk of it to our investors. They're expected to receive 80% of their initial investment, and then we'll hold the deal for another 5 years with the goal to sell here at year 8. So these right here are our goals to increase rent year over year in each of the 28 units. I mentioned we have 8 turnovers going on that we've been doing over the last 6-7 months. So those are here on the left-hand side. You'll see bolded or highlighted in red. The bolded ones have already been renovated and are rented out. So you can see for this building, unit A2, the rent that we started with was $825, and we renovated the unit, and now we're renting it out for $1,150. So right now we're achieving our year 4 projected rents. So huge opportunity to over deliver on these projections because we underwrite so conservatively. So now looking at one of the ones that the turnover's in progress. So this one, it started out as $575. And our for the 2-bedroom 1-bath, the current market rent $1,150. So you can see this will be a huge increase, almost a 50% increase on this one right here. This one as well, it was previously listed for $550. It's a 2-bedroom 1-bath, so we do expect it to rent out for $1,150 each month. And then you'll see here, these are the 2 that we renovated and are rented. We're here at our current rents, year 1. So this is how we keep track of where we are in relation to what our projections were for investors. So looking at our business plan for this deal, so when acquiring this property, we got a 3-year seller financing, which would allow us the time to turn over units and raise rents. And then by the time the 3 years is up, like I mentioned, we're going to refinance the property, enabling the investors to recover a significant portion of their investment. So what we're looking at into where we are, our initial projection was to turn over 9 units in the first year. So we're currently at 8 already. So now we've changed our target to have at least 10 turnovers in the first year. So in year 2, we had a projection to turn over 4 units, thinking that slowly it would kind of start tapering off. Our new projection is 6 turnovers. And in year 3, again, 4 turnovers, and we're creating a new projection at 6 turnovers. So where we were total for our initial projection, we were planning to renovate 17 out of the 28 units, and now really we're on track to be renovating 22 out of 28 of our units. So really what this means for our investors in terms of financial updates, because the current turnover performance is going better than expected, we've already exceeded our year 1 projections. So with 6 months remaining in the calendar year, we're really well positioned to surpass our turnover goal, leveraging this momentum for continued growth and success. So super happy here. We've seen this play out on our other investments as well. really being able to turn over those units early on adds so much value for the investors. So while we have experienced a lower than expected cash flow in the first half of the year, it's important to highlight that this is aligned with our business plan. Our primary focus has always been on building strong equity growth. And so we're pleased to report that significant progress in this area. And our reassurance and commitment to investors that our business plan is proceeding as expected, if not better. We are always committed to delivering strong returns and maintaining open communication with all of our investors. We stress that in all of our communications. Their trust and support is truly invaluable to us. And then a quick look at our company updates. We always just try and be very, very transparent with next steps and when to expect next communications and updates, and especially the money, right? Investors want to know when's the next distribution. So we always have that listed here. The next update will be October 4th. All of the financials, our investors receive full access to the P&Ls, the profit and loss statements, so our investors can see the quarterly financials, where exactly the money is coming and going in their investment. So all of that is accessible on our investor portal. We also have our communications, our announcements, newsletters. There's different summary reports and investor documents all available there. So that is really just a brief rundown of what one of our quarterly communications look like. Open communication is first and foremost for all of our investments. Because we invest primarily with other healthcare professionals, I personally love getting to know our investors. If you are interested in real estate syndications, if you're curious about learning what it takes to jump into one of these partnerships, I would absolutely love to chat. I will link my information below. Thanks so much.